Vanakkam. Today we are going to see another very interesting topic, IRAC norms, and particularly non-performing assets, the highlights. So this presentation, it will be useful for your entire bank audit, not only for statutory audit, it will be useful for your control audit, stock audit, revenue audit, and all kinds of bank audit. Today we are going to see the highlights, and let me go and give the presentation. The caution, before going to the presentation, I want to give a caution to all the fellow members who are going to do the bank audit. So this is a very, very important thing. That is non-identification or non-classification or wrong classification of NPA. Definitely, you will be getting a notice from the Reserve Bank of India if you have not done this properly, if you have not done the non-performing assets classification correctly. So this is a very, very important thing. So you have to classify the NPA correctly as per the RBI norms. And don't yield to any type of pressure given by any of the officials. Don't worry that you'll be getting the audit next year if you're as per the RBI norms. And this is the request I want to make. Don't yield to any type of pressure given by any of the officials with reference to the NPA classification. And they, even some bankers, they will definitely force you not to give MOC. But if it is a real thing, please give the MOC without any fear. Don't worry at all. And if you are not classified it properly, then come to the point number one, you'll be definitely getting notice from the Reserve Bank of India. That is why I want to start this presentation with the correct caution. And which is correct? NPA expansion is non-performing assets, non-performing accounts, non-performing auditor, non-performing advances. I think you know it. It is non-performing assets. This is the correct expansion of NPA. And now, today we are going to take up the non-agricultural advances, specific reference to term loan and credit loan, and agricultural advances, direct and indirect advances. These two topics I am going to give elaborately, and wherever possible, I am going to share the NPA techniques, NPA pressure, and NPA games. This point number 3, 4, 5, we will see later, but point 1 and 2, we are going to deal in depth. So, in the year 2015, the RBI has issued the master circular. After that, on 1/10/2021, they have given a new IRAC norm circular, that is revising the base circular of 1/7/2015. That is, so I request you everyone to go and read circular number 1/10/2021. Later on, the RBI has issued these three circulars in the year 2021, that is after B and C, that is two circulars by way of clarification to 1/10/2021. That is circular number 1211, dated circular 12/11/21 and dated 15/2/2022. These two important circulars, you must go through it because a lot of clarifications have been given to the circular number 1/10/2021, which has been revised after 2015. So these four circulars, please concentrate. And I want to give another information to you. For every 1st April of every year, the RBI will definitely have already issued master circulars. Say 1/4/2022, you have got a master circular. 1/4/2023, you have got a master circular. And this year, you have to carry out the master circular. You have to carry out the IRAC norm classification as per the master circular issued by Reserve Bank of India on 1/4/2023. Even in between that, if there is any clarification, they will issue. But so far, they have given only this master circular dated 1/4/2023. And you have to remember one thing, that is more than 90 days norms, more than 90 days. If the insurance installment or remaining overdue for more than 90 days, that account will become NPA. It is out of order. If it remains more than 90 days also, that will become NPA. So more than 90 days is the thing that you have to remember. And with reference to term loan, they say that interest and principal overdue. With reference to CC, there are 8 methods to identify the overdue. So that is also called as out of order. BP, that is bill purchase, bill discount. If it is not paid, then that has been classified as overdue. Short-term crop, that is overdue for 2 crop season, and long-term crop, 1 crop season overdue. We will discuss this in detail in the subsequent presentation. Here, I'm going to start with the special mention account. So this is the first thing you have to remember. This is an additional direction given by the Reserve Bank of India. You have to give the correct classification of SMA, special mention account. What is it? So this classification you have to carry out before an account become NPA, before an account become NPA. And now, after the account is overdue but not paid, so close monitoring is required. And the bankers, they say that these are all called as stressed asset. These are all called as stressed asset. And it will become the SMA, SMA accounts, if any accounts will fall under the category of SMA, it will become NPA after SMA 2. And there are 3 things. You have to remember SMA 0, SMA 1, and SMA 2. So SMA 0, 1, 2. It is not SMA 1, 2, 3. It is SMA 0, 1, 2. SMA 0 is applicable in between first 1 to 30 days. Then it is applicable only for the term loan and not for CC. SMA 1, it is applicable between 31 to 60 days. It is applicable for term loan as well as to the CC. SMA 2, it is applicable in between 61 to 90 days, and term loan, it is applicable for term loan and cash credit loan. And here is the clarification which the RBI has given to the Master Circular dated 1/10/2021. They say that the account has become overdue when they run the day-in process. So that means if the account is overdue on 31st March 2021, as per 1/10/2021, the account will become NPA on more than 90 days. So that means only on 1/4/21. But this circular clarifies a very important thing that when the due has not been paid on 31st March 21, then when they run the day-in process on 31st March 2021, on that day onwards, that account has become NPA. So this is an important thing that you have to remember. And this is with reference to SMA working for easy understanding. If the due date is 31 to 3/2023, as per the clarification given by the circular dated 12/11/21, when they run the day-in process, that is the SMA starting date. So from there, you have to add 30 days. So 31st March 1 and remaining days in April 29, so 30. So SMA status, zero status, it is between 31/3 to 23 to 29th April. And it is slipped to SMA 1 on 34/23. Again, from 34/23, the SMA status of 1 comes up to 29 March 2023, where 30 days ends. So the SMA, it slipped into the SMA 2 from 35/23. And again, SMA 2 starts from 35/23 to 28 June of 23. If the amount has not been, that is overdue amount has not been paid, or if the out of order has not been regularized on or before 28th June of the month, then that account will slip into NPA. That is after 90 days, this account will slip into NPA. So this is a very, very important thing that you have to remember. And another thing is, and this is also another SMA working as per the this is also another easy example for your easy understanding. This is that is 30/12/23. The SMA 0 ends on 29th January, then 28th February for SMA 2, SMA 1, and for SMA 2 it ends on 29th of March. Now, this I am giving for the easy understanding. Once an account has become NPA after SMA2, next thing is the arrival of NPA. So up to 90 days, it remains in the SMA2. Okay, let us start the 90 days. This is also another easy understanding. Now, how to calculate the 90 days. So, to 5/4, let us take 5/4/23 is the due date. So 5/4 is the date of running the, and on the date of running the day end process, that account has become overdue. So 5/4/23 is 1. Remaining days of April is 25, 31st May, 30th June, 3rd July. So an account which has become overdue on 5/4/23, it will be regularized on or before 3/7/23. Otherwise, this account will become NPA on 4/7/2023. An account which is due on 5/4/23, it has to be regularized on or before 3/7/23. That is, if it is not regularized, then that account will become NPA on 4/7/23. Same is the case with 8/5/23. It has to be regularized on or before 5/8/23, because where the 90 days ends, on the 91st day, that account will become NPA. This is the base based on which you have to arrive at the NPA. Next important thing is, this is also another exercise. That is 5/8/23. Again, it has to be regularized on or before 2/11/23. Otherwise, this account will become NPA on 3/11/23. Two examples I have given. And now the debtors. So this is very, very important. They are saying, let us take the total debtors. In this, there are good debtors, doubtful debts, and bad debts. So these are three things which you have learned in accounts. So good debtor is called as standard. It remains permanent. No provision, nothing is required. And if it is a doubtful, they are classified into four parts. One is substandard, that is for 12 months, and D1, D2, D3. So 4 years. Then after D3, it remains constant. In spite of the classification as doubtful debts, if the accounts have not been paid or if the accounts have become bad debts, then that will be classified as loss asset. I think this chart also will be useful to you. That is standard, substandard, D1, D2, D3, then loss assets. And here it is a very, very important thing. What is the NPA cutoff date for the audit of 31/3/24 with reference to the statutory audit? I can say the cutoff date is 2/1/2024. Let us take the due date of 1/1/24. For example, it's a slow thing. Kindly go through its specimen very carefully. 1/1/24, where the 90 days ends, we have to calculate. January 1, remaining days of January is 30. February is a leap year, so 29, and 30th is of March. So 33/24. So an account which has become due on an account which has become due or installments which have become due or loans sanctioned on 1/1/24 has to be paid on or before 30/3/24. Otherwise, that account will become NPA on 31/3/24. So when you do the NPA working, you have to calculate all the dues applicable up to 1/1/24. If all the dues of 1/1/24 has been paid on or before 31/30/3/24, then that will not be termed as NPA. Let us take another example, another category, 2/1/24. If you add 90 days, it falls on 31/3/94. So the NPA date is, next day is the NPA date, that is 1/4/2024. So the due date of 2/1/24 has to be paid on or before 31/3/24. Otherwise, that account will become 1/4/24. That means it goes to the next financial year. So don't worry at all. So here, that is why I want to say that NPA cutoff date. NPA cutoff date is any loans sanctioned or due on or after 2/1/24. You need not worry at all. All the accounts have to be treated as standard. And if the loans due on that is on or before 1/1/24, then you have to collect the amount. So this is the thing. So you have to remember the NPA cutoff date for 2/1/24. NPA cutoff date for the audit of 23/24 is 2/1/2024. And next one, this is a spread, the period. So for substandard, it is 12 months. Why it is 12 months? This is due to the leap year concept. For doubtful one, doubtful two, doubtful three, it is 1 year. Here it is 12 months. Here it is 12 months. So for substandard, it is 12 months. For D1, D2, D3, it is 1 year. So 5/12/23 and the substandard period is, that is 4/12/24, and the D1 period is 5/12/24 to 4/12/25, and D2 is 5/12/25 to 4/12/25, and for D3 5/12/25 to 4/12/29, and remains permanent, because after D3 nothing is there except loss asset. So this is a thing you have to remember with reference to NPA substandard D1, D2, D3. For substandard, it is 12 months. For others, it is called as 1 year. And use of the term. For the term loan, they are using the word overdue. For cash credit loan, they are using the word out of order. Overdue and out of order. Use of the term in uh, use of the term in NPA. That is, downgrade means downgrade gradually. Substandard D1, D2, D3. So this is the thing you have to carry out with reference to NPA. You have to downgrade gradually. Upgrade. When you want to upgrade the account from NPA category, say down substandard or D1, D2, D3, when you want to upgrade, you have to upgrade only to standard. You have to upgrade only to standard and not from D3 to D2, D2 to D1. It should not be like that. When you want to upgrade the account, you have to upgrade from the status of substandard D3, D2, D1 only to standard and not upgraded gradually. This you have to remember. When you want to downgrade, it has to be done gradually. When you want to upgrade, you have to upgrade only to standard. This point you have to remember. And this is also another important circular. Please remember, see, in long form audit report, there is one column, whether the branch has followed the RBI guidelines or not. This is a circular. You have to go through it specifically. That is 12/11/21. They say that the loan sanction letter must specifically mention the loan due date. Normally, with reference to cash credit loan, they say that the period of cash credit loan is only 1 year. But that should not be the case hereafter, after 31/12/21. So all the loan sanction letter must contain the due date specifically. In case of existing loan up to 31/12/21, the dates can be mentioned only at the time of review or renewal. So this is a very, very important circular that you have to mention while you carry out the long form audit work. That is, all the sanction letter must contain the due dates specifically. Please go through the RBI circular dated 12/11/21. So 1/10/21, 12/11/21, and February 2022 circular. All the three circulars are very, very important with reference to IRAC norms. And now the next point is, and if NPA is reported, this I have already said, if the NPA is not reported, if it is not properly classified or wrong classification or non-classification, then the auditors, chartered accountants will be responsible to answer Reserve Bank of India, Government of India, then ICA and court, or even the regulatory authorities. So please be careful with reference to NPA classification. And for this, I request you to go through the sanction letter very carefully. And in the sanction letter, you can find the loans have been sanctioned for the domestic purposes, that is loan to be operated within India, and for the foreign transactions. And in that sanction letter, you can find the loans have been sanctioned for the term loan and working capital loan. And as well as, that is point number 3 is for the non-agricultural loans. And point number 4 is the agricultural loans, that is agricultural term loan and agricultural working capital loan. And the banks have sanctioned the term loans, that is non-agricultural term loans, for the purpose of buying a factory, land and building, or constructing a land and building machinery, housing loans, etc. And even for the vehicles also have been covered under the uh, term loan purposes. And now, the NPA is basically you have to calculate based on the repayment method. How many methods of repayment? There are five methods of repayment. That is, one is principal plus interest. Second one is equated monthly installments. Third one is holiday period interest and installment. Fourth one is bullet repayment. And fifth one is balloon repayment. So only on these five methods, the loan repayment with reference to term loan is being fixed. So first, you have to understand the concept of principal plus interest, EMI, holiday period interest, then bullet repayment and balloon repayment. Let us discuss how these accounts have become NPA step by step. First method, we'll go and see the thing. So let me explain with the chart. First method, that is principal plus interest. Calculate separately principal plus interest. This you can identify from the sanction letter. Let us take point number one. What is the number of dues from the date of sanction up to 1124? Why it is up to 1124? Because the NPA cutoff date is 2124. So everybody has to calculate the dues from date of sanction to 1124. Let us take it is 50. What is it per amount due? It is 1000. So total amount due to be paid by the party is 50,000. So this is amount has to be paid. So let us take the sanction limit is 2 lakhs. You deduct this 50,000 to this 2 lakhs. So the outstanding should have been only 1,50,000. So this is the amount fixed with reference to first method, that is the outstanding should be 1,50,000. Now go to the sheet, that is go to the outstanding balance from the statement. And if you find point number 6, the outstanding as on 31/3/24. Here, the point number 1 says you have to calculate dues up to 1124, and the dues up to 1124 has to be paid on or before 31/3/24. Otherwise, that account will become NPA on 31/3/24. Because that account has to be paid on or before 33/24. Otherwise, that account will be termed as NPA. So you have to go and refer the outstanding balance. You compare it. Point number 6 says 1,48,500, and the amount of point number 5 is 1,50,000. The outstanding should have been 1,50,000, but actual outstanding is 1,48,500. That means the customer or the borrower has paid all the amounts intact. So that account should not be termed as NPA. Go to point number 7. Outstanding as on 31/3/24 is 1,53,500. So that means instead of 1,50,000, the outstanding is 1,53,500. That means it has exceeded point number 5. Then you can term that account as NPA. This is the basic. I think you can stop the viewing this program. You can please understand this table so that you can easily work out the NPA. So this is the first method, that is principal separate, interest separate. I'm going for the second method. Here it is called as equated monthly installments. Equated monthly installments. So you have to calculate the EMI from date of sanction to 1124. What is the total EMI to be paid? So total EMI is 50 and per EMI amount is 1000. So the total EMI amount has to be paid by the borrower to the bank up to 1124 is 50,000. Now go to the go to the dues amount paid in the account. So go to the credit side of the loan account. Please add all the genuine credit from date of sanction to 31/3/24. You have to add all the genuine credit. So this is the amount paid. Then compare this with the amount to be paid. So let us take point number 4. The amount to be paid is point number 3. The amount to be paid is 50,000. Go to point number 4. That is the amount paid by the borrower is 60,000. Instead of 50,000, the borrower has paid 60,000. That means he has paid in surplus. So that account will not become NPA. Point number 5, it says the amount paid to be paid, EMI amount to be paid is 50,000, whereas the amount paid is credited is 40,000 rupees. So 50,000, instead of 50,000, the party has paid only 40,000. That means there's a shortage of payment. Then that account will become NPA. This is with reference to second method. I hope you would have understood this. So calculate EMI from date of sanction to 1/1/24. What is the number of due per EMI? Multiply. This is the due amount to be paid. What is the amount paid? You compare it. If the amount paid exceeds the due, then that account is standard. If the amount paid falls short of the due, then that account will be termed as NPA. And I'm moving to the third method. So here it's only a holiday period. EMI and EMI or first method, everything is common. Now you have to add holiday period. Holiday period or gestation period, that is during construction or during installation of machinery, the branch, bank, they gave permission to pay the interest first. Then after 1 year or after 18 months only, you have to pay the principal come interest. That is EMI. So here the borrower has to pay the or has to service only the interest. So I'll explain this with a chart. And here the only one addition is you have to take the holiday period interest and the EMI due. Then you have to see the amount due to be paid, what is the amount paid, and compare it, then arrive at the NPA. So let us take holiday period interest up to the holiday period is 20,000 rupees. Then go to point number 4. That is amount to be paid is 50,000. So totally the party has to pay 1 plus 4. 1 plus 4 is 70,000 rupees. Holiday period interest is 20,000. EMI amount is 50,000. So totally the party has to pay 70,000. Now go to the credit side of the borrower account. You have to add all the credits. All the credits means only the genuine credit from date of sanction to 1/1/24 or so 31/3/24. You have to add all the credit made into the account by the borrower. So this is the amount paid. Let us go to the example of 6. So point number 5, amount to be paid by the borrower is 70,000, but the borrower has paid 80,000. That is in surplus he has paid, so that account will not become NPA. Point number 7, the party has paid only 60,000. Instead of 70,000, the party has paid 60,000. That means there is a shortage of repayment. So then that account will become NPA. So we have discussed so far the first method, second method. First method is interest and principal separately. Second method is equated monthly installments, where is principal come interest. Third method is holiday period interest plus EMI or principal plus interest. Here I worked out only the EMI. So 3 methods we have discussed with reference to term loan. Next one is bullet repayment. At one shot, you have to make the payment. At one shot. So let us take jewel loan. So now the branch has sanctioned the jewel loan. Within 1 year, the amount has to be paid. If the party wishes to pay, he can pay. But there should not be any alteration in the due date. So at one shot, they have to make the repayment, jewel loan and funded interest term loan. So this is called as bullet repayment. If the amounts have not been paid on the due date, so from the due date, then add 90 days, the account will become NPA. So this is with reference to bullet repayment. Next one is balloon repayment. Just see the balloon. It grows like this. So it is nothing but when you go into the mouthpiece is small, then it grows. Just like that. In the first year, the repayment of loan is small. Then it increases. That is first year, the loan repayment is small amount. Then next year increases, third year increases. So just like a balloon, the repayment is fixed. And all other workings of 1, 2, 3 are applicable for the balloon repayment. Loan repayment. So this is normally for the education institutions, manufacturing industries, because the machinery has to come from other industry, from other country also. So the machinery has to come, it has to be installed. And in case if it's a housing loan or so in case of education institutions, the education institution generate the income based on the admission of students. So in the first year, the amount will be less. Second year increases, third year increases. So balloon repayment is normally applicable for the education institutions and manufacturing industries. Even as an auditor, you have to advise the client to get the repayment of term loan in the form of balloon so that they will have some breathing time. And let us go to the general thing. Everything is based on the sanction letter. And according to my experience, please be careful with reference to housing loans and education loans because holiday period interest will not be considered in few of the bank software. I cannot blame all the bank software. Few software, they the consideration towards the holiday period interest uh, is very less. So please be careful when you calculate the housing loans and education loans with specific reference to the NPA. Next one is we are moving, so far we have seen the term loan. Now we are moving to the cash credit loan, that is working capital loan. Here I want to explain 8 methods based on which one CC account will become NPA. Let us go step by step. Everything it depends on the sanction letter. Please go through the sanction letter and don't worry about the loans sanctioned after 1/1/2024 because the cutoff date for the financial year 24 ending is 2/1/24. So any loans sanctioned on or after 2/1/24, you need not worry at all. So we have to do this working for the loan sanctioned on or before 1/1/24. And first method. So here I'll explain about the first method. It's a very simple. First method is, for example, you have to do this for every quarter. But when you do this for 31/24, I want to explain based on the last quarter. That is that is interest debited into the account from 2/1/24 to 31/3/24. Here, interest includes the penal interest. Interest includes the penal interest, whatever be the interest debited into the account for the last quarter. So you have to add all the interest debited. Interest includes penal interest from 2/1/24 to 31/3/24. For example, it is 35,000. And go to the credit side, add all the amount remitted into the account by the customer. That is, it is only a genuine credit. So other person's money should not come into the account. And there should not be any wrong transfer, wrong credit, wrong to the current account. So you have to see only the genuine credit. You have to add all the genuine credit from the from 2/1/24 to 31/3/24. Compare it. The amount paid is 35,000. In case if the party has paid 40,000, that means interest is service, then that account will not become NPA. And in case the due amount of 30,000 interest debited is 35,000, but party has remitted only 30,000 into the account, then that account will become NPA. So this is a very important thing. What is the interest debited and what is amount paid to the account? Compare it. If the amount paid exceeds the interest due, then everything is serviced, no NPA. And in case if the interest amount paid into the account falls short of the interest due, then that account will be treated as NPA. This is the step 1. And step 2 says at least on one particular day, between 2/1/24 to 31/3/24, the outstanding balance should be below the sanction limit. So this is a second exercise. So you have to see this from this angle. First thing, on first step, the outstanding balance on few days it exceeds the sanction limit and a few days it falls below the sanction limit. But in second step, the outstanding balance should be below the sanction limit, at least for one particular day. It is only the day, it is not in between that. This point you have to remember. So, for example, if the sanction limit is 1 lakh, in case if the outstanding limit is 98,000, for the end, at least one particular day, the outstanding comes to 98,000, then that account has to be treated as standard. And in the second exercise, it says 1,02,000. That means the outstanding limit has not come below the sanction limit, then that cash credit loan has to be treated as NPA. Let us move to the step 3. That is, outstanding limit is always below the sanction limit. Okay. Now, the outstanding balance in step 2, the outstanding balance exceeds the sanction limit. In step 3, the outstanding balance is below the sanction limit. If that is the case, you have to follow step number 1. Again, that is you have to add all the interest debited into the account from 2/1/24 to 31/3/24. Go to the credit side, add credit, and compare the thing. If the amount paid exceeds the interest, then everything is serviced. Then that account has to be treated as standard. So this is the 3 methods you have to remember. This is a basic calculation, but there are 8 methods only on considering the entire 8 methods, you can classify the cash credit loan as NPA. Now I am moving to the step 4. Here, the concept is based on the drawing power, an account will become NPA. So you have to refer the sanction letter with reference to stock statement, and the stock statement has to be submitted on monthly basis, quarterly basis, or half-yearly basis, or annual basis. Everything is clearly mentioned in the sanction letter, and you have to see the data submission of the stock statement, and the branch has to maintain the stock statement as well as the stock register. Whenever the branch has received the stock statement, then the branch has to affix the seal on the stock statement. It clearly indicates the date of receipt of the stock statement. All the stock statements should be properly recorded in the stock register. And based on that, the drawing power is arrived at. And if, in case if the customer or borrower has submitted the stock statement belatedly, then penal interest has to be charged. And the stock statement should contain only the item that is sanctioned, the sanction letter. This point also you have to see while you verify the stock statement, and branch manager has to go for inspection after the receipt of the stock statement. And LC, that is letter of credit stock, should not be included in the stock statement because LC stock will become will become the property of the borrower only when the amount is paid. So till the amount has been paid towards the LC stock, then that account will be, then the entire stock will belong to only the supplier. So LC stock should not be included. And after that, only drawing power is arrived with reference to stock statement. With reference to debtor statement, please refer the sanction letter and see the margin. And you have to calculate the age-wise or customer-wise data. You have to analyze those age-wise and customer-wise data. And sister consent debts should be excluded. These sister consent debts you can find from the process note prepared by the branch. And in case if there is any accumulation of data, and you have to analyze from the bad debts angle also. And every 6 months or 3 months, the customer has to produce the chartered accountant certificate, that is with reference to the debtor balance. And here I want to make a request, don't sign other auditor's case. So if the CA certificate has not been produced by the borrower to the bank once in quarter or half yearly, then again also the applicability of penal interest rule, applicability of penal interest concept is there. Then you have to analyze the bad debts. Now, it's a tabular column I want to explain. So this is a total stock, detect obsolete stock, non-moving stock, dead stock, LC stock, creditors. And then that is called as paid stock. Paid stock. In that paid stock, detect the margin. Then the balance is called as drawing power. Total stock, less obsolete stock, non-moving stock, dead stock, LC stock, creditors. So all this you have to deduct. Then that is called as paid stock. From the paid stock, deduct 25%. Then that comes to drawing power. Next thing is DP calculation with reference to debtors, total debts, less debts above 90 days or 120 days. These days have been fixed in the sanction letter. These debts you have to exclude, and remaining is called as net book debts. In that, deduct the margin, say 40%, then drawing power is arrived at with reference to debtors. Now, DP as per stock you have to add, DP as per debtors you have to add. This is the total drawing power. And now go to the outstanding balance. Now you compare the drawing power with the total outstanding balance. If the outstanding balance is below the drawing power, then it is okay, normal. In case if the outstanding balance exceeds the drawing power, then penal interest has to be applied. This is with reference to applicability of penal interest. But if it is in continuous excess for more than 90 days, then that account will become NPA. This is according to me. And few say that it is 6 months. But according to me, if the drawing power exceeds 90 days, drawing power exceeds 90 days continuously, then that account will become NPA. So there is a difference of opinion that few say that it is for 6 months, you have to calculate the stock statement. According to me, you have to calculate only the 3 statement. Please refer the RBI circular for your further clarification. So this is the one thing. Now go to the concept of 4. If the drawing power is less than the outstanding balance for the period from 1/1/24 to 31/3/24, then that account will become NPA. And now I am moving to the another step called renewal of the limit. Cash credit loan has to be renewed within a period of 180 days from the original due date. This up to 180 days is called as temporary deficiency period. So RBI says that temporary deficiency period is 180 days from the original due date. So any type of renewal extension can be done. It should be only part of this 180 days. It should not go before 180. So 180. So this 180 days concept is very, very important. A limit has to be renewed within a period of 180 days from the original due date. If the limit is not renewed within a period of 180 days from the original due date, then that account will become NPA. 180 days is very much important. 180 days you have to calculate from the original due date. So this is the thing that you have to remember with reference to step 5. I am moving to step 6, which says that is both temporary period renewal and short renewal should be part of the 180 days. This point you have to remember. Step 7 says non-submission of stock and data statement from November 23 to 31/3, November 23 to be submitted on or before 31/3/24. It is not 31/3/23. It should be on or before 31/3/24. Then that, otherwise the DP account has to be treated as zero. Then that account will be termed as NPA. Step 8 is even stock statement should be regular from 1st April, from April. If it is an irregular, suppose if 3 months statements have not been submitted, then the account would have become NPA in the earlier period also. So this is a very, very important 8 methods based on which you can classify one account as NPA with reference to CC. So please, I hope you would have understood the 8 methods. Any doubt, you are welcome. You can, I've given my number in the presentation. You can call me at any time. I'm ready to explain to you. 770-840-4440. You call me. I am ready to explain your doubt with reference to cash credit loan. Now, another area of NPA is all the cash credit loans. They are like packing credit loan, bill discounting, crystallization of bills, LC, everything you have to calculate from the due date. So this is very, very important. Next one is NPA has to be calculated on borrower-wise concept and not facility-wise. Suppose the borrower has got 4 facilities, one facility has become NPA and 3 facilities are regular, then you have to classify the entire 4 facilities as NPA. So NPA has to be calculated on borrower-wise and not facility-wise. Please remember this point. NPA has to be calculated on borrower-wise and not facility-wise. Then other points of NPA we have to see. So here, unrealized interest, you have to remember. For this, I'm going to explain in the later stage. Unrealized interest, you have to remove from the NPA account. And after you identify one account as NPA, no further interest has to be charged into the account. And date of NPA is very, very important. The date of NPA need not be only the year end, need not be only the quarter end. The date of NPA can be even in the middle of the month also. The NPA will be, date of NPA is very, very important. So date of NPA is very, very important. And in case if there is no DPN or a renewal letter or the DPN has become time barred, then that account has to be treated as loss asset. So this point number 4 is very, very important. In case there is no DPN, you cannot file the case before court of law. So that account can be directly, you can transfer to loss asset. And another very important area that we have to discuss is erosion in value. So either it should be doubtful or loss asset. That also we will see the later part. And with reference to government guaranteed advances, central government guarantee, if it is there in the loan account, then that account should not be classified as NPA. But if the guarantee is given by the state government, then all the NPA norms are applicable. So guarantee given by the central government, there is no NPA. And if the guarantee is given by this state government, all the NPA norms are applicable. With reference to consortium advances, that is 4 bankers, they lend jointly for a particular project. The NPA classification you have to carry out on each individual basis. Suppose in A bank say that our account has become NPA and B, C, and D banks are there, that B, C, and D banks, they need not classify that account as NPA because the NPA norms with reference to consortium, it is applicable for the individual loans, for individual bank classification. in case there is any sublimit, you have to calculate the NPA by pooling all the limit together. Then you have to arrive at the NPA. So this is with reference to sublimit. So main limit, where the main limit is there from there you have to calculate the NPA. So advance against term deposits, NSC, KVPs, Vidra Vakash Patra, there is, you need not worry at all. All those the assets have become standard. And agricultural advances affected by natural calamities, and you have to go and refer the circular. And if the RBI permits the reclassification or restructuring based on the natural calamity, then the concept of NPA is not applicable. So for this, you have to refer the circular carefully. And the point number 3, 4, 5, advances granted under rehabilitation, same concept of there is further sanction of say D1, D2. That is, you have to it is slipped to the next status, and post shipment guarantee given by Exim Bank, and within 30 days the money has to come. Otherwise, if the money has not come, then that account has to be treated as NPA. And with reference to takeout finance, applicable, it is applicable for the long-term projects. There is one institution takes the another, it goes to the next institution. The same concept of NPA is applicable. Suppose for X institution, it is the NPA is there, and if Y institution, Y bank takes over the X loan, then the status continues. That is, the NPA status shifts to the new financial institution. This is with reference to takeout finance and export finance. Okay, this I'm going to skip. And for point number last line, you please go through the last line. Advance to staff. All the NPA norms are applicable. They may come and dispute, say they may dispute you that, sir, for staff there is no NPA concept. No. For even for the staff advances also, NPA norms are there. Now we are going for so far we have seen the non-agriculture advances with reference to term loan and cash credit loan. And now we are going for the agricultural advances, which is very, very important. The agricultural advances have been classified into two parts: direct agriculture and indirect agriculture. All the indirect agriculture, 90 days norms are applicable. For all the indirect agricultural advances, 90 days, that is, regular norms are applicable. So here, with reference to direct agricultural advances, so with reference to direct agricultural advances also, they say that crop loan and non-crop loan. For non-crop loan also, the 90 days norms are applicable. So here, crop loan, we are going to discuss about the crop loan. So what is when we have crop loan? Crop loan, that is, it is based on the crop season. What is a crop season? Crop season is crop period plus harvest period plus market period. All this period pulled together, it is called as crop season. When you want to classify one agricultural advance as NPA, that is direct agricultural advance as NPA, there are two concepts with reference to agricultural advances. That is short-term crop season, long-term crop season. Short-term crop season means the crop which has been cultivated within a period of 1 year. And long-term crop means the period exceeds the 1 year. So if it is a short-term crop, they say that it is 2 crop season. For long-term crop, it is based on the 1 crop season. We will discuss in detail in the next slide. Let us go to this. So with reference to short-term crop, where we can find the short-term crop, you please go and refer the sanction letter. Everything is there in the sanction letter. In the sanction letter, they mention the crop season period. They mention the due date. So now go to this exercise. First exercise, I'm going very slowly because so many people are confused. I've got the confusion because of the classification towards the agriculture advances. 1615 to 31316. This is clearly mentioned in the sanction letter. And in the sanction letter, they mention the due date for the loan is 31/3/16. And next is 2 crop season. That is, here it is 2 crop season. That is, this crop season which comes after the due date. So the original crop season is 1615 to 31/3/16. So the next crop season starts after 31/3/16 is 1616 to 31,317, two crop seasons. So first crop season is 1616 to 31,317 and 1617 to 31,318. So two crop seasons. So the due date to be paid is 31,318. That is a crop season, a loan which has become on 31,316. It has to be paid on or before 31,318. Otherwise, that account will become NPA on 1/4/2018. So this is an important thing. I hope you understand. Crop season is clearly mentioned in the sanction letter. Due date is also clearly mentioned in the sanction letter. So two crop seasons you have to add after the due date. So the two crop season ends on 31/3/18. So it has to be paid on or before 31/3/18. Otherwise, that account will become NPA on 1/4/2018. If you understand this table very clearly, then agriculture advances classification with reference to NPS, nothing. This is very simple. I'm going to the second exercise. As per the sanction letter, the crop season is 2/9/16 to 28/3/17, and the due date is 28/3/17. And two crop season which comes after the due date is 2/9/17 to 28/3/18 and 19. So the due date, that is the amount which is due on 28/3/17, has to be paid on or before 28/3/19. Otherwise, this account will become NPA on 29/3/19. So this is clearly explained for short-term crop. Due date, from due date, add two crop season. That crop season which comes after the due date. So from there, you have to arrive at the thing. And another exercise with reference to the crop season, say the crop season is 22/3/16 to 18/10/19, 18/10/2016. Here, the due date mentioned by the sanction is 31/10/2016. So add two crop season which comes after the due date is 22/3/17 to 18/10/17 and 22/3/18 to 18/10/2018. Sorry, 22/3/18 to 17 to 22/3/18 to 18/10/2019. Then the due date is 18. So actually, I wrongly mentioned 18/10/19. Then 19/10/2019. So same, this exercise you can easily understand. That is with reference to short-term crop loan. And now I am moving to the long-term crop loan. From the due date, we have to add only one crop season. That is 24/15 to 36/16 is the crop season. So as per the sanction letter, they mentioned the due date as 36/16. That is the due date which comes after the due date. So add one crop season 24/17 to 36/18. So the amount which is due on 36/16 has to be paid on or before 36/2018. So short-term crop, from due date, add two crop season, which comes after the due date. For long-term, from the due date, add two crop season, which comes after the due date. Thereby, you can arrive at the NPA. And now we are going for the another very important thing is once if a loan account has become NPA, you have to remove the unrealized interest. So how to remove the unrealized interest? They say that in the circular, they say that past period, they say that you have to remove the unrealized interest, commission expenses of past period. That is clearly stated in 1/10/2021 circular, even in the 1/4/2023 circular. So you have to remove the unrealized interest for the NPA loan. So first, when you accept, when you fix the account as NPA for the first time. For the earlier year NPS, you need not do this exercise. For the first time NPA, you have to do this exercise. For the first time NPA, you have to remove the unrealized interest, commission, expenses for the past period. Past period means, according to me, from the sanction letter. From the sanction letter. Say they never say that for the last 2 years. They say that past period. So this is what they have said in the circular. And you have to take only the genuine credit. All these 3 points you have to remember. Let me explain this with reference to the unrealized interest. There are 3 methods for the reversal of unrealized interest. And the first method, both the years have got the unrealized interest. For the 22-23, you go to the period from 1/4/22 to 31/3/23, 1/4/23 1422 to 1423, you have to add all the interest. Interest includes penal interest. You have to add all interest. Now go to the credit of 1422 to 31,323. Add all the amount remitted into the account, only the genuine credit. Then compare it. In case if the period of 22-23 has got 48,000 and genuine credit is 30,000, then there is a shortfall of 16,000. That is one account you have identified the account as NPA. Say for the year 31-3-24. Add interest for the year 22-23, that is add April to March 48,000. The genuine credit from April to March is 32,000 and the shortfall is 16,000. Go to the next year 23-24. Add interest debited from 1/4/23 to 31/3/24. It works out to 52,300. Add only the genuine credit 43,000. Then the shortfall is called as unrealized interest. So both the years you have got unrealized interest. Here I have taken only 2 years, but the circular says it is past period. Suppose if the loan is sanctioned from say 1/4/2020, you have to add the same, you have to do the same exercise. So for easy understanding, I have given you only 2 years. So both the years you have got unrealized interest of 25,300. So this is the first method. And both the years you have got shortfall. Now I am moving to the second year. That is 22-23 you have got a unrealized interest. Whereas 23-24 you have got a surplus. So for this example, in the first example of 22-23, you have got a shortfall of 16,000. Whereas 23-24, you have got a surplus payment into the account to the extent of 17,700. So 23-24 has got a surplus. 22-23 has got a deficit of payment of interest. So the surplus of 23-24, you can adjust against the deficit of 22-23. Please clearly understand. The surplus of 23-24, you can adjust against the deficit of 22-23. So 17,000 out of 17,700, you can adjust last year deficit. That is possible and not vice versa. So this point you have to remember. So I'm moving to the third method, whereas in 20-23, you have got a surplus, whereas you have got a deficit of 23-24. So the surplus of 22-23, you should not adjust against the deficit of 23-24 because the surplus of 22-23 would have been adjusted towards the principal of the loan account. No money is left. So surplus of 22-23, you cannot adjust against the deficit of 23-24. So I hope you have clearly understood. I'll go to the first method and the both years you have got deficit. So you can add and you can remove this as the unrealized interest. In the second method, you have got a surplus in 23-24. You have got a deficit in 22-23. You can adjust surplus of 23. 23-24, you can adjust against the deficit of 22-23. And here in the third method, there's a surplus of 22-23. You should not adjust against the deficit of 23-24. Here, the unrealized interest is 23-24. So please go through this presentation repeatedly so that you can easily understand what is the amount you have to reverse in the form of unrealized interest. Please be a master in all this three table. And now, this is also another exercise I have given. This also, you just go there, just I'll stick, just for 10 seconds, I'll keep. Otherwise, you can take the screenshot. You do the pause here and you take the screenshot so that you can easily understand. That is in the first method, both the years I've got unrealized interest of 48,068. In the second method, there is a surplus of 31,962 and there is a deficit of 25,430. They have adjusted and the unrealized interest is 0. In the second method, the first year has got the surplus of 6,010. There is a deficit of 22,638 in the second year. That is 23-24. You should not adjust the surplus of earlier year to the current year deficit. Surplus of current year can be adjusted against the deficit of last year. Surplus of last year should not be adjusted against the current year deficit. So this is the way in which you have to arrive at the unrealized interest. I hope you would have understand this method very carefully. Have the screenshot, go through it, and any doubt you are welcome. And now we are going to see another very interesting topic called erosion in property value. An account has become directly loss asset or directly doubtful, though as per the norms, it is standard. So it is basically, it depends on the value of the property. On the date of sanction, there is one value. Due to some other reason, other than the reasons which are beyond the control, suddenly the property value has fallen down. Then the standard asset will become doubtful or the standard asset will become loss. In case due to the change in the importance of the value of the property has fallen down in between 50% to 10%. 50% to 10% of the value has decreased, then you can directly classify that account as doubtful assets. As doubtful assets. Suddenly, if the property has lost its value, then you can classify the property that is that NPA as that is standard account as loss asset. For example, the property value at the time of sanction is 40 lakhs. Due to the valuation or due to some change in importance of the property value, property importance, that the value of the property has come to 18 lakhs. Then that means there is a decrease of 45%. So if the value of the property has decreased between 10 to 50%, then that is called as D3. It is not D1, D2. You can directly take to D3, doubtful 3. That means you have to make the 100% provision. And in case if the property value falls below the 10%, so if the property value is 2 lakhs, so it is only 5%. So you can directly treat that standard asset as the loss asset. So this is also another area, erosion in property value. But here I want to make a request to you. Please go and read the circular issued by the Reserve Bank of India. That is 4 circulars you have to read thoroughly. The circular issued on 1/10/21 and one circular they have issued in the month of November. One circular they have issued in the month of February 22 and the master circular which is applicable for this audit, that is one for the year ending 31/3/24 is 1/4/2023 master circular issued with reference to prudential norms. You go to the RBI site, you will get it. So based on that, you can do this. And this is a provisioning. That is for substandard. This is a provisioning. Standard also you have to make the provisioning. Doubtful also you have to make the provisioning. And loss for loss assets, you have to do the 100% provision. And this additional information I also want to give. The provision is to be made on the outstanding balance or not on the net NPA. Unhedged foreign currency, if it is there, provision may be increased due to foreign currency fluctuation. Hedged agreement, regular provisions. And valuation of NPA account should also be made once in 3 years. This is a very, very important thing. If any account has become NPA, suppose if you are going to the bank and you are seeing the thing, then there you found that valuation is not there, not done. Even though the account has become NPA some 3 years before, you have to instruct the branch to do the valuation. So valuation of the property has to be done once in 3 years, even though that account has become NPA. For 10 crore and above, you please understand the concept of downgrade and the upgrade study. And here I want to give the new technique which I've got in my experience, that is Baba Mutra. So it is called as Baba Mutra. So here is an easy way of identification. Suppose we are not able to understand. So it is a raw method. I cannot say this is a full method, foolproof method. It's an easy identification. You can do it in a manual method. So here I have to ask for the loan trial balance. You have to ask for the loan trial balance from the date of opening the branch to till date. From the date of opening the branch to till date. So then apply the Baba Mutra concept. This is a new technique. This is not a foolproof technique. And this technique I've used in my experience. I'm going to give you the Baba Mutra concept. So you have to ask for the loan trial balance. Now, left hand. In left hand, this finger goes for the date of sanction, this finger goes for the due date of sanction. So you have to fix your finger from date of sanction, then see the due date of action. Just pull it, pull it, pull it. If the due date of here, there's a due date of the loan, but even that also there is a outstanding there, then you can classify the outstanding as NPA. That is any loan outstanding after the due date, you can classify as NPA. This is the concept. Due date is date of sanction, and that is date of sanction you have to take, and another one is due date of the sanction. Just pull it, pull it, pull it. Another method is on the right hand side. You have to take the loan sanction and the amount outstanding. You have to put your finger on the loan sanction amount and the outstanding amount. You pull it, pull it. If the loan outstanding exceeds the loan sanction, then that means the party is irregular. Then you can classify that account as NPA. So left hand is date of sanction and due date of sanction, and right hand is loan sanction and amount outstanding. You do this exercise jointly, then we can easily arrive at the NPA. But this is not a confirmed technique. It's only a raw technique. I'm just for the easy understanding of NPA, I'm telling this exercise, and you just check it. And if you're confident with this check, you can do it. But you have to follow all the rules which I've said in the earlier method. So this is the thing I want to tell you, and with reference to the NPA. So I've just refreshed your brain. Just I refresh your knowledge with reference to IRAC norms. And I wish you all the best for your bank audit career for this financial year 23-24. And if you got any doubt, you can call me 9941 or 33399, or you can call me 770-840-4440. And thank you very much for the patient watching of this program. Nandri, Vanakkam.